Well, hey folks, very quick update. This is a little bit rough and ready because I'm doing it for my members, but I thought we've got some very interesting chart patterns going on, so I thought I'd share it with YouTube in general. So I'm using a super duper new Elgato Wave 3 microphone, which I bought just for my YouTube channel, so I hope you appreciate it. Let's look at NASDAQ and S&P, and these are really interesting. Now, we've seen a lot of going on in the market. We've seen banks collapsing, Credit Suisse, we've seen Silicon Valley Bank, we've seen bond yields going up and down like crazy. We've seen gold surging, the ECB not pausing with their interest rates. There's debate about whether the Fed will increase interest rates at the same rate or even pause. Even people talking about a pivot in interest rates by the Fed. I don't think that's going to happen. But we've seen a lot of turmoil in the markets. And what's interesting about the stock market, we've got two different pictures here. We've got the S&P, which is potentially negative. We've been trying to sell this. We wanted to sell S&P this morning on a rally back up to the underside of this channel line, which has formed over the last period since the end of last year. It looks potentially like a bearish channel, and we've broken down beneath it. We've got lower highs and lower lows on the chart, despite yesterday's bullish move and strong rally, finishing off with a shaven head top. We only moved up towards the underside of that channel. We had orders to short at 39.80. We didn't quite get there. We just missed by, I don't know, we got to 39.76, which is a pity because it's moved down sharply from there. But you can see we've battered up against the 100-day and the 20-day moving average, not quite reaching the channel top. But we did break up in yesterday's move through the 200-day moving average, which is bullish. But overall, this picture doesn't look terribly constructive for the S&P. On the NASDAQ, we're seeing a completely different picture. I realize that these two indices represent different stocks and different stock groups, but very often they move in sync, but not at the moment. This looks like a bullish channel on the NASDAQ. And we broke up through it yesterday with some vigor. We were trying to short at the top of this channel, and we lost a small trade there. And we're now short again, having reached the 78.6% Fibonacci level over here. Overall, it seems to me like the stock markets should be moving down. We've seen strong jobs. We've seen the ECB resolute in increasing interest rates by 0.5%, and the Fed's likely to follow and not actually pause on interest rates. We've seen strong inflation, PPI going up in the services sector. Inflation hasn't really come down. We've met expectations, but there's no downward surge in inflation. And I think we're likely to see interest rates continuing to rise. And with all sorts of turmoil in the banking sector and job layoffs and general pressure on manufacturing and banking and that sort of thing, one would think that the stock markets might be bearish and at least pause in the recent 5 or 6 day rally. We've had 1, 2, 3, 4 days in a row. Are we going to get a free fall Friday in stocks and a rally in the dollar, or are we going to see this surge continue? It's options expiration Friday, remember, so there's going to be some activity in the market because of that. So basically, we're short on NASDAQ and hoping to short the S&P up into the 39.80 and maybe 4,000 level. We'll have to see whether we get that opportunity later on today. So having looked at those, a lot of it's going to depend on what happens with the dollar today. Now, I've drawn pink lines all over these charts just to show you where my areas of interest are to short, most of these in fact. And if we have a look at dollar index, you can see we've just pulled back down to the top of the support zone where the 50-day moving average is kind of in the middle. We've just touched on there, and during today's trading, early trading already, we've bounced off there with a little bit of a wick forming already. So that's going to inform what happens on the major currency pairs, potentially what happens on gold and stocks and some commodities. So a little bit of hope for the dollar index to find support here. I think it will. I'm not 100% sure, but I think it will. I'm still looking for a move on the dollar index back to 106 and then 107.50, where these Fibonacci levels lie above us. That would be the 38% fib and the 50% fib to complete this retracement, overall retracement from the move down, and then potentially for the dollar then to begin another leg down, back down towards these lows. In consideration of the dollar index, let's have a look at the euro, and I've got the supply zone drawn on the euro as well, this pink level, and we've just moved up there this morning, just touched it actually, right on the edge, and we've fallen back down. So we've been shorting the euro from near the top here this morning, and we're looking for a move back down. In line with the dollar index, I think the euro has some space to move lower. My target for the euro is 1.03. I think we might pause at 1.04 and 1.05. So we've got big round numbers, 1.05, 1.04, 1.03. And I think it's possible when we get down to 1.03 that the euro will find further support and potentially begin to rally back up again in the short term or the medium term even. So that's something to watch out on the euro. We're short the euro, looking for those moves to happen. And similarly, we're short on the pound. The pound has done something very similar, has rallied up a little bit higher, but not further than this supply zone that I've got drawn in here, which has formed resistance on multiple occasions going back some time. In fact, going back a long time. And you can see that resistance line along here is potentially a pretty solid resistance line for the pound. I'm only saying this on the euro and the pound, and the same goes for the other major currencies, because I think that the dollar index has got further weakness. If you look at the pound, it's got a bit of a lopsided head and shoulder look to it, so that's also pretty encouraging. So that right-hand shoulder will be lower than the left-hand shoulder, and then potentially we'll reject right here. We're short on the pound, looking for a move down to, I don't know, 1650, maybe 1400, 1.14, 1.16. We're in line with the dollar index and the euro, what we've just said. I think we'll then begin to find some support and potentially a medium-term bottom for a move back up to retest these highs on the pound. So overall on the majors, our strategy against the dollar is to sell for the moment for the next 200 or 300 pips down towards support, where we'll start to change our direction and take a view towards the long side rather than the short side. So that's the majors. We're also short on Euro CAD and Pound CAD, and I think those will follow suit, although the pound against the CAD is also showing a little bit of strength in comparison to the Euro CAD, moving back into that resistance level and actually testing the top. So we have very small positions on here. But once again, we've got this sort of triple top. You could potentially view that as a W bottom or an M-shaped top. So we'll have to see how that one pans out. The other thing I want to look at is the yen pairs. We've got some ideas to sell these pairs into these lines above us, into these resistance areas in yellow. We haven't quite reached there yet. Whether we'll get there or not, I don't know. But overall, I'm bearish on the dollar yen, the euro yen, the Aussie yen, and the Canadian dollar yen. Let's have a look at gold and silver. Gold, yeah, it's overbought and it's surging higher dramatically. It's been an almost vertical move up from around 1800, and now we're at 1950 or thereabouts. We have reached this channel top though, and this previous high. So it's going to be very difficult to be buying gold at these levels. And I think, again, we're going to have to look to buy gold on dips, but the dips will be shallower than the previous dip that we had hoped for at 1780. We almost got to 1780, but we just didn't get there. So we weren't able to get long on gold. We did try a couple of shorts here after this big extension higher. Those didn't work. But for those looking to short gold, despite this vertical climb and the overbought conditions, look at what's happened in the past at these levels. We've had these massive spikes higher, blowout tops forming on gold through the 2000 level, all the way up to 2050. This looks to me like we're very much in danger of the same thing happening, and I wouldn't be surprised if we surged up through here in a dramatic sort of short squeeze all the way up into 2000 and potentially above up to 2050, and who knows, potentially even more. These are very violent and dramatic moves. They've happened twice in the recent past. Don't be surprised if it happens again. It's not the time to be shorting gold. It's probably also not the time to be buying gold, considering that we're right at the top of this channel line. Any dips on gold, though, would be a good place to buy, and we could look for dips down into 1850, 1870, and perhaps even at this stage, 1900 will form a sufficient support level for gold to continue to rally. So you need to be really careful on gold. Let's have a look at this weird set of charts where I've got Bitcoin thrown in with some of the commodities. I want to talk about Bitcoin very quickly. We'll talk about natural gas in a short while. Bitcoin is an interesting one. There's our supply zone. We've just broken through it and moved a little bit higher. However, having said that, this channel top that we've just sort of moved through is an interesting level because it does form a very beautiful channel top, and we've got a channel bottom which is parallel to it. And this channel top line here goes back a long way into July last year. You can see it was support, then it was resistance, and then it was resistance. We've just broken through it. I wouldn't be surprised if Bitcoin struggles to reach higher than we are right now. I don't know what's going to happen. We'll have to watch and be very careful with this one as well. It's behaving in a similar fashion to gold. It's almost as if this has become a bit of a safe haven along the lines of gold. I don't think it's as safe as gold. I don't think the market views it as safe as gold. And I think we're going to see some pullback, potentially back down to the channel bottom and perhaps even lower than that. But what we need to do is watch to see what happens today. Today is going to be crucial. If we manage to hold above this channel top and this pink resistance zone, that would be pretty bullish for Bitcoin. However, if today forms a big spike high, a big wick candle, and we close back potentially beneath this channel top and beneath this horizontal resistance level, in other words, if we could get a close beneath 26,000 or thereabouts today, it might be a good signal to sell Bitcoin for a move back down. I'm not too sure that this rally is going to continue for much longer. And finally, let's just talk about natural gas whilst we're here because it's on the chart. I've just done a long video on natural gas. It's on this channel. I posted it about an hour or 2 hours ago by the time you get this. So go and have a look at that video. And I've given you my complete strategy, my levels, everything that I'm looking at, and my personal trading strategy. So go and have a look at that video if you're interested in trading natural gas. Well, I hope you've enjoyed this content. And as usual, please like the video and consider subscribing to the channel. Take care.